Good morning or good afternoon if you're on the East Coast. I'm all out here on the West Coast and our sun has disappeared. Now it's cloudy and gray. There's a little bit of blue sky. So we're back to normal out here. So if you're worried about us melting in the sun, we're good. We're good. Welcome out to Coach's Corner. My name is Tony Benson. We'll be your guide for the next 45 minutes to an hour. And we are going to have some fun, unless you don't like to have fun. Because I like to have a good time here. So you're going to learn a couple things too. A lot more than a couple things. Of course, depends on where you're at. Some of you might be brand new. Some of you have been doing this a long time. But the disclaimer is there for you to see. Basically just says we're not registered broker dealers, investment advisors. We will not give you any recommendations or advice. I will not refer to, if I refer to any trades, assume that they are a practice trade. For regulatory reasons, we discuss funded trade. Of course, nowadays being able to set trades up, you can mimic practice in real, right? So some of us do that. Not everybody, but some people. So just a quick review. This is what's coming up in the next little bit. The premium online workshops, which are typically for only subscribers, Monster Market Movers, the 29th. On the 29th, Pattern to Flash with yours truly. That's the tool that I created that is all about technical analysis. If you are brand new to trading and brand new to technical analysis, in my humble opinion, that is an absolute must. You need it. If you are not new to trading and you've been trading for some time, that is a must. You need it, in my humble opinion. And I'll show you at least at some point today, you'll have an opportunity to subscribe to it or at least get a free trial, which I would suggest you do, because you will get a lot of extra stuff with the free one, including this class that's next week on April 29th. Because some of you know that if you're familiar with Wealth Builders, for I think just about every single product or service that we offer, there's a 2-week trial. So next week, next Thursday, is my class that's exclusively for Patterns of Flash subscribers. If you do the 2-week trial, you can get into that class. You will be a subscriber. So hopefully that makes sense. May 3rd is Mastering the Trade. Trading You, May 10th and 24th, Inner Circle 19th. And then, of course, the Mastermind group is every Tuesday. Right, and then there's a couple free online. Coach's Corner, this one again. We do consistently. Power Hour courses every Monday. And then a few other ones there, the Power Option Plays, Cover to Call Explorer, and the E-Mini Think Tanks with Brandon. So, and the other Power Option Plays and Cover to Call, of course, are with Rob. So here you have what's coming up. Now to the topic of the hour. Breakout trading. What exactly is a breakout? It is basically when, thank you, Amelia. And if you didn't see, Amelia put in the chat the link to the free trial. So if you go ahead and do that now, you can, or just stay tuned and I'll talk about it more later. You'll see it as well. I'll use it here. So, but a breakout is basically when a stock moves up or down through a support or resistance. Some people will call it, if it breaks down, to call it a breakdown. I just call it all a breakout to keep it simple. I like to keep it simple. When I first started doing this 20 years ago, I got off in the weeds a lot and complicated it way more than necessary. And it is extremely easy to do because there is so much information. There are so many people that are throwing so much information at you. I don't even think drinking from a fire hydrant is a good analogy anymore. That's an understatement. It's like drinking from Niagara Falls. It's even worse because now with the internet and YouTube and everything that's out there, there's a million people who are quote unquote experts, right? And everybody's got their opinion and everybody wants you to do it their way. Everybody says this is the way to do it. And it's not that that's bad. I think in most ways it's a good thing. But when you're starting out, it certainly can create a lot of confusion. When I started 21 years ago, it was April of 2000. And you either read books or you went to a live workshop, not a live web shop, a workshop in person. Now we have power to do this, right? I mean, we've got a Canadian here. Oh, good morning, eh? Yes, I think I said that right. Right? I mean, you can be anywhere in the world now and do this. And I read a lot of books and I had a lot of coaches, but now it is significantly worse because there's so much more at you, right? So you've got to have the ability to dig through and figure out what's best for you, what works for you. Because there are, I mean, how many strategies are there? Especially when you get into options trading, there's so many different ways to do it, and there's not a right or wrong way to do it at all. Trading as a business is pretty much like any other business. You can open a retail store, you can open a McDonald's or a Chick-fil-A or a Taco Bell or a Burger King. They're all restaurants, right? At the core, they're the same. Do they have little variances and nuances? Yeah, and trading's the same. What you've got to figure out is, what do you want? Do you want a McDonald's? Do you want a Burger King? Do you want a Chick-fil-A? The answer should be Chick-fil-A, because apparently they're the most profitable fast food chain on the planet. I didn't know that until recently. I thought McDonald's was, but apparently Chick-fil-A is far and away more profitable than they are, which was interesting to find out. But getting back to the breakout, I like to keep it simple. Whether it's breaking up or down, it's a breakout. Okay. And usually what we're looking for is the breakout of a pattern. And if you haven't figured it out yet, I'm a patterns guy. I think they even, somebody dubbed me the pattern whisperer, which I thought was pretty cool, actually. But here's just one example, and I'm going to show you several examples, and then what we'll do is show you another way, because I know there's a lot of folks here. I see a lot of new names, and I'm going to show you, if you want to accelerate the learning curve, one way that you can do it, on top of learning and training with somebody, any one of the coaches here. But here is a symmetrical triangle. That's a snapshot. You can see it's Apple. I don't know how big that is on all screens, but this was back last year. So it's only, November of 23. But a symmetrical triangle is a continuation pattern, right? Which basically says, okay, the trend that's in place, which you can see very clearly is up. If it breaks out of that pattern, then the odds are that it's going to continue higher. And then you can see that red line, that 1879, that vertical line, called the base. Right? That's how we figure out about how much we would expect it to move if it breaks out. Behold, what happened with Apple. Sure enough, just a few days after that first day, it breaks out and it runs not only the measured move, that expected move of 1879, but it also hits that previous resistance, right? So it comes up and tags this point, and it also does exactly what we expect it to. This is the beauty of patterns. This is why I love them, because most of the price patterns have this capability where you get a measured move, so you know about what to expect from it if it breaks out of the pattern and if it does what we want it to, right? So, and it's not uncommon at all. It doesn't happen all the time, of course. There's very little things in life that are 100%. There's pretty much one thing, and that's death. You don't even have to pay taxes if you don't want. You can just go to prison instead until you die, right? But the beauty of patterns is consistent. And when it breaks out of a pattern, that's exactly what we want. Don't you want consistency? That's why I trade. And again, they have to be of a pattern. Sometimes it's just a support or resistance level. Typically, that coincides with type of pattern. But consistency and reliability is exactly what we want, right? If you want to grow your account on a consistent basis, reliably, then you need to do things. It's just like going back to the McDonald's or Chick-fil-A, right? If you open a Chick-fil-A or a McDonald's or any franchise for that matter, especially one that's been established for a long time, what do they have in place? They have systems in place. They do it every time. They do it consistently. They are reliable, right? No, when they do it this way, these are going to be the results. And you need to set up your trading business in the same manner. And like I said, there is no right or wrong way to do it. If you want to open up, Jim Bob's hamburger joint and compete with McDonald's, so you don't have to pay the royalties, you can do that. But consistency and reliability won't be there until you develop it and you establish with your customers. You put the system in place to create that consistency and reliability. And that's what we need to do in trading, right? So every one of you is different. You have different capitals you're working with. Some of you might be starting with a little bit of money. Some of you might be starting with a lot. You have different risk tolerances. You have different life experiences. You have different fear levels, and all those things come into place. The first thing you've got to do, one of the first most important things with trading, is know yourself. You have to know where you're at. Mentally, emotionally, you need to know where your skill level's at. And one way to find out, for those of you that are new, that don't have patterns in Flash or haven't experienced it yet, is there is, I'm just cheat. You guys okay if I just go over there right now? So this is the tool itself. It's inside your My Account page. But there's a little thing here called quizzes. Now, if you're like me, you hated being tested in school. I didn't like it. But it's a great way to test where you're at, right? From a knowledge perspective. What do you know? And there are 4 different quizzes in here, right? Basics of trends. Some of you might be new. Even if you're not new, I would suggest you watch all these videos. But if you're not sure where you're at with regard to your knowledge or your skill level, right? And that's the most important part of knowing thyself, is where are you at from a skill level perspective? Go in and take these quizzes. If we click on basics of trends here, do the trial, go in and take this. The value of the stock is based on what? You just click on the one that you think the answer is, answer them all, come down and hit submit, and it will give you your test results. You can literally find out within a few minutes. If you don't get every single one of these right, then you need it, right? Whoops. So knowing thyself is knowing where you're at from a skill level. That will help to create the consistent and reliability part, right? Breakouts will typically come with momentum. Normally what you're going to have, because, well, the third bullet point there is other traders see the breakout too, right? You're not the only one looking at the chart. There are hundreds of thousands, if not millions, probably millions of people around the world looking at the charts as well. And they're trading off of those charts. If they're active traders, they're trading off it. And especially the bigger names, they get traded often. When they break out of a certain level, anybody that's watching it, trading it, sees it. And so it's like the last bullet point there, swim with the sharks, right? And ride the waves. And that is what we need to do as traders. Now, Washington's not exactly known as a surfing state. I took my kid, I grew up in Oregon, on the Oregon coast, and it's beautiful, right? If you've ever been to the Oregon coast, you know what I mean. It's gorgeous. And I moved up here to Washington in 1998. And everybody said, well, the Washington coasts are terrible compared to Oregon. So I never went. I've been up here, what's that, 23 years now? I only went for the first time like 5 years ago. I spent 17 or 18 years up here, didn't go to the coast. And I finally went, and they're right. It's not that great. It's just flat and it's just sand. There's no rocks. There's no waves crashing off the rocks. And there's no tide pools. But I took my kids up to Forks a couple years ago. Little town, I'd heard about it, but there's a rainforest that I've heard about for years. And then there's the beach there as well. It's a really beautiful area. But we went one day to the rainforest, and that was cool. And the next day, which is only 20 or 30 minutes away, was the beach. And we got to this beach that everybody said was the best one in La Push. And it's about a mile long, and it's kind of a rounded, not really a horseshoe shape, but it's a flat horseshoe, if you will. But I was kind of surprised when we walked out on the beach, there's a whole bunch of people in the water, and they're sitting on this board. And I'm like, wow, there's surfers here in Washington. Apparently there must be good surf here. And it reminded me of Oregon beaches. There were rocks everywhere and waves crashing into the rocks. And it looked a lot like the Oregon coast. And I'm watching these surfers, and I'm like, that's interesting. There's about a mile to a mile and a half beach. And 90% of them were all clustered in this one little space, this one little area, and they're all sitting there waiting for a wave. And there's lots of analogies you can make in trading. But I remember thinking, is like, that's exactly what we do with regard to trading, right? If you go out on the outskirts where nobody's at, they're not there for a reason, right? Because there's no activity, there's no waves out there. People are clustered in this one little spot because that's where the waves are at. And when you surf, right, you go out there and you sit and you wait patiently until a wave comes your way. And then what do you have to do? You have to get in front of the wave. You want to get on the wave and ride. And in surfing, you want to do it before it breaks. And actually in trading, we'd prefer to be there before it breaks. The hard part with trading, and this would be one of the differences, is that if you get there before it breaks and it doesn't break, then you're going to hurt a little bit financially, right? You're going to lose some money. If you do get there and it does break out, then you're ahead of everybody else. So you just maybe caught a good wave. So typically what I'm looking for as a trader is waiting for it to break out. But you know what the funny thing is that's where a lot of the other traders that are clustered in that little group waiting for the right wave, that's where they pile on. That's where they jump into it. So, and that's really where we want to be. We want to look for the breakout, and when it breaks out, we jump on that wave and ride it as far as it goes. And obviously we know that, you know, not every wave works out beautifully. Sometimes they're awesome and you have a great ride, and sometimes they just peter out and nothing happens. Same thing in trading. So look at some other examples. Here's one. This isn't necessarily a pattern, except that it's just in a nice little downsloping channel. Right? This is Activision. And sure enough, it breaks out right there. And what does it do? Boom. This is, what's that about? Let's just call it 80. It's a little bit below 80. You'd probably get in right around $80, which is another concept that's in Patterns of Flash, is round numbers. Round numbers can be a big deal. And so it breaks out there and it ran all the way up to 92. So it's at 12 points. 12 points on an $80 stock. That is what, 15%? Is the math right? That's a 15% run in about a month, month and a half. Now, I don't know how many of you trade options or trade stock, but if you trade option, and just this is just generically speaking, kind of a general rule of thumb. Of course, it depends on which option you buy, but typically for every 1 percentage point that a stock moves, you'll get approximately 10% move in the option. So if you got a 15% move in a stock like this one, an option will yield about 150% rate of return. Again, that's just generally speaking, and it does vary depending on which option you buy. Let's just say you get 100%, not 150. Are you going to cry about it? I mean, it's 100%. You double your money in 4 to 6 weeks, depending on how much you put at risk, right? It's kind of a no-brainer. It's like, okay, whoops, I made 100% instead of 150. And if y'all have any questions, then throw them in there. If you have specific stocks you want to look at, we'll be through these in just a little bit, just showing some examples again, and then we'll go look at some other charts, and I'm going to show you how to speed up the process. So this is Delta again. This is just a couple of months ago. You see, and this is another ascending triangle, and you'll notice that almost all of these patterns are all bullish patterns. Most of them are continuation patterns. And of course, Delta ran up. This one was very quick too. And again, this is, you know, 43 bucks. It bounced out of it. And again, if you're relatively new, I know I see a lot of familiar names here, and y'all know this concept, right? But here's the interesting part: is there's lots of different stuff going on here. Not only do you have a resistance level right here, right, where the stock runs up and hits it and it pulls back. It came back up and hit it right here again, slowed down there for a few days. And let me clear that real quick. I know this is a little bit smaller than I like. Hopefully you can all see this, but either way, just go with the concept. There's a pattern right here, a candlestick pattern that is a continuation pattern that gives us an indication that the trend, which obviously is up here and longer term is up, that candlestick pattern gives us a high degree of accuracy with regard to continuing to the upside. So now this is the beauty of patterns. You've got a price pattern, right? You've got the ascending triangle right here. you've got a candlestick continuation pattern right here that's testing the previous resistance. And then boom, the next day after the last day of that candlestick pattern, you get a big gap to the upside. And then, in case you missed it, because you say, oh, now it's too far, I can't get in because there's too much risk. Lo and behold, it did what we call a pullback, a retracement, but it pulls back and does a roll reversal. So this old resistance becomes new support, and then it takes off from there. And this was, again, let's say you got in at 44, it ran to 50, that's 6 points. 6 points on a $44 stock is what, 12, 14%? Not bad for, and this one wasn't 4 to 6 weeks. This was 1, 2, 3, 4, 5 or 6 days. It's a little bit better. It's 12 to 15% in 4 or 5 days. Not too shabby, huh? Here's Dropbox, another ascending triangle, right? Where we've got an uptrend in place, and then you've got peaks that are hitting the same. And what happens here? Same thing. This is a breakout. Now, this one did not do a little pullback. This one ran right through it and just went crazy right through it in 3 days. It's only a $25 stock, right? So if you're working with a smaller amount, then this is something to look at. And an option on this, I don't know how volatile it is. But now I'm curious, what are the DBX? I don't know how much options are, but I'm curious to see if you bought, say, a 35-day. Now I'm curious. Yeah, see, they're not even that expensive. 20. Oh, those are weeklies. I don't want weeklies. Let's just say you bought June, way out. That's way out. Oh, there it is. I don't know, where's the stock right now? They're only, I mean, the call options are, the at the money options are $2.50. Or $2 actually. So they're not super expensive, right? On a $25 stock, $2%, $2 to $2.50 for an at the money. So you're at $3 or $3.50 for an in the money, a delta with about 70. So if you're buying an option on this, when it was at 25, you're probably buying the 22s, 23s, 24s, maybe, probably the 22s or 23s. It's going to cost you maybe $3 or $4. And it ran from 25 to 28. That $3 or $4 turned into $6 or $7 in a matter of 3 days. Again, just showing you what's possible. And this is the kind of breakout we're looking for. We find the pattern, and then we set up a trade looking for the breakout. Now, if you're a little longer term, maybe you don't want to trade it over 3 days. Maybe you want to trade longer term. Here's one that, again, we had, it was in kind of a little channel. You could actually make a triangle out of this, but the channel's a little better. There's a resistance there about 40. And sure enough, it breaks out back here about 40, takes off. And over about, 5 or 6 months, it runs all the way to 60. So that's a 50% rally. Let me grab some of these questions real quick while you stare at all that money that you could have made. Woulda, coulda, shoulda. It's a bad syndrome. Let's see, Robert. Okay, awesome. Robert says, I'm in the mastermind group now. What are you planning on getting in Patterson Flash for? I'm just playing. But you do have, again, you have the 2-week trial. So you can jump on that. And then next week, the live class will be perfect. Come out. And we do this for an hour, except we just basically look at charts for an hour. And I go into, it's pretty much an open forum. So too small. Yeah, I figured that, Brenda. So, well, you already know the patterns. I know that because you've had Patterns to Flash. And so if you had trouble seeing it, it's okay. Just go with the concept. The ultimate reality is that, what I'm trying to show you here is that patterns work, and breaking out of patterns, or even if it's just a resistance or a support level, is very powerful. Very, very powerful. Is it, I think is it Gillis? I think that's how you say your name, I'm guessing. I hope I got that right. It's appropriate to put your resistance a little bit in angle for order entry a little bit earlier. I think if I understand your question, so you're saying you want to get in a little bit earlier. Which can be good. I'm assuming that's what you said. Correct me if I'm wrong, but so you're basically saying if you can move your resistance level to a different spot so that you get into it earlier. Let's use this one, and hopefully I'll answer it with this one. I'll use this example. So there's a little resistance there, right, where you see the 177. So this resistance right here that I drew, I mean, charting is very subjective. Okay, there's no right or wrong answer where, well, there kind of is. There's a kind of a basic guideline, but it can be moved. It depends on, and part of it depends on how you're trading. If you're trading intraday or off of the intraday candles, then this line that you see there that I just circled, let me get rid of that real quick. That line could be shifted up a little bit if you go off the candles, the wicks, and you could adjust it a little bit. But for the most part, that's about where it should be. So I draw the lines usually based off of closing prices, and then take into account the intraday moves, right? But if you're talking about getting in before it breaks out, there is definitely a danger and a risk to that. Because what can happen, especially if it's a false breakout, because it's not that uncommon, that something, I mean, I've shown you examples of things that do break out. I probably should have put one in here of something that broke out, but then turned around and went against you. That's why we use stops, right? Because sometimes they break out and then they turn around, right? And they don't continue to run. So you have to have your stops in place to protect your capital so that you don't lose everything. And the one I've done it on before, I did it on Peloton with the paddle. Well, next paddle of the week it'll be either over the weekend or probably Monday. Will I've got it all ready. I just got to record it and then I'll send it off. And whenever the tech team gets it posted. I speak of that. Oh, good. I'm glad. Peloton was one. That's what I was just referring to. Will, who subscribes to Patterns and Flash, was asking about the pattern of the week because every single week I post a pattern. Right? I go find one pattern, might be like the one you see on your screen, for example. It's just one pattern I found that I like, that has the potential for, it may be a potential trade, right? Something for you to look at, not only learn from, but also potentially trade. And Peloton was one of those that worked out well. It was a head and shoulders. And I actually got into that before it broke out, before it broke the neckline. Like this one is an inverted head and shoulders. Could also be called a triple bottom. The end result, don't get caught up in little nuances, because whether you call it a triple bottom or an inverted head and shoulders, the end result is the same, right? But if you get in before it breaks out and it bounces, because right now that level where you see the 177, that's a resistance level. You could get in right here where it's at, but look at the last 3 times it's hit it, right? It came up and hit it, came up and hit it, came up and hit it. So 3 times it's hit its head on this level. So if you get in right here and you say, well, I think it's going to break out, well, you're just guessing. There's no confirmation that it's broken out. And it could very well come up here and hit its head again and turn back down. So one thing I've learned, usually the hard way, is getting in before it breaks out, which I think is what your question was, Gillis. If you get in before it breaks out, you take the risk that it uses that level as a support or resistance again, like it's done before. And it's not that that's bad. And here's what I did with Peloton. I got in with a small position, just a partial position, before it broke, because there were other indications, there were other patterns that made it look like it was probably going to break. So in that situation, what I did is said, okay, I know that this could be support. It is support right now, and until it breaks below it, there's no indication that it's going to break out. But I see other things in the chart that tell me it's probably going to break that. So I'm going to take a little tiny bit of risk. I'm just going to dip my toe in the water. I'm not going to dive in head first. I'm not going to put all my risk on the table with this one trade, but I'll stick my toe in the water. So if it does break, then I'm a little bit ahead of it. So I love your question and the thought process. But again, you've got to account for the reality that just like the chart you see on the screen, that level that we're looking for it to break out of is still resistance. Oh, Jill, okay. Is that right? Okay. So what happened in this one? Sure, this one took off and there it broke out. So again, going back to your question, here's the thing. Okay, let's say you got in here at 22. If you waited for the breakout and got it at 23, yeah, you missed $1 of move. But by missing that $1 of move, you actually reduce your risk. Because now once we get that breakout, now we increase the chances that it's going to continue. Why? Because other people are now looking at the same thing saying, hey, it just broke out. And if you notice, there's another factor, there's volume. The volume came in big time and this thing just took off, right? For a few days it took off, then it did a pullback like it normally does and bounced. It didn't come all the way back here, but it came back down. So if you didn't get in right here, you've got another opportunity to get in here. And then it takes off 23 to 26 in a matter of, what, a month? Again, the point of these is the potential. And here's the last example, and then we'll go play a little bit. And I'll show you how to accelerate the learning curve. Well, again, the fastest way from a learning perspective is to get patterns of flash and then add on what we'll look at. So this is BSX, and oh, Will's here. I was wondering, there's a long list of names here. I didn't see yours yet, but this is one that we looked at in last week's patterns in the flash class. So the class that's there exclusively for subscribers. See, I get excited and talk too fast sometimes, so I apologize. I got to work on that. This is one we looked at, and you can see the date. I don't know if you're going to see the date there. Okay, 4/14. So this was last week, the day of the class. We looked at it and said, here's an ascending triangle, and the red, green, and orange lines that you see there are the trading plan that we put in place. That said, okay, it is on the verge of breaking out. It's kind of sort of broken out of that resistance level, just barely, but not enough to be convincing. So the red line, 39.34, is the point that I say, okay, if it breaks out and we get into the trade and it goes back down and it gives a false breakout, that is the place where I'm getting out. I would no longer feel confident in this thing moving higher if it breaks back below that resistance level. Because it should, from a technical perspective, if it breaks out of the resistance that it's using right there at 39.67, then it should use it as support. If it breaks above it and then pulls back, it should use it as support. And if it doesn't use it as support and it breaks back below that level, then I'm out. I don't want to have any more risk on the table. I'll take my little loss and I'll move on and find another one. And then the target is right up there. The resistance level you see there's, I don't know, was it 41.92 where that blue line is? So I put the target just slightly below that, 41.80. And then what we do is go into the risk reward calculator, which again, we will bring up, where did it go? Oh, that's right. I hit the wrong button. I hit home thinking I was going back to the patterns of flash home screen. So this is, if you haven't been here, this is what you'll see. Under your premium subscriptions, you'll have your patterns of flash link, which takes you into the tool itself. These are all flashcards. Just like flashcards you use to memorize and recognize things quickly, that's what the flashcards do. But then there's this little thing down here in the corner called calculator right there. Yeah, you can see my mouse. Okay, good. So if we click on the calculator, and let me shrink it up here a little bit. You'll see here, we put in a stop of 39.34. And again, this is relating to BSX. And then the target is 41.80. And it spits out 39.95, which is the entry point. Risk reward calculator is 3-to-1. That's kind of the baseline. If you're doing 4-to-1, then you can either adjust it a little bit. You can't adjust the calculator. It's pretty static. I haven't had anybody ask that, and I used to have both on the Excel spreadsheet I had, but I really only use 3-to-1. Mainly because if it's something like that, I'll scale into it. If there's enough space in there, I'll scale into it. So it kind of, again, I stopped using the 4-to-1 because of that. But so that's what the risk reward calculator does. And there's basically gives me a trading plan where the first thing I do is, okay, here's the pattern. We've got a beautiful ascending triangle. Everything, the volume's low, everything about it is saying it's a textbook. And if it breaks higher, it's probably going to go up. So then I look at it and say, okay, I'm going to plan this out in case it does go, right? I'm going to sit and wait for the wave. I see the wave and I think the wave may come. So let me prepare to start paddling. So first thing I do is, where's the stop? Where am I getting out if this thing goes against me? And then where's my target? And my entry point is simply based on those two numbers on a mathematical formula that says, give me 3 times upside for each dollar of risk that I have. And if you're not sure why that's critical, again, I know go to this bonus video section. If you have patterns in a flash already, go do it and watch this one. If you don't, get the trial and watch this right here. I'm glad, actually Will said that last week or the week before, and it was a great suggestion, and I'm going to use it every single time now, because this right here will show to you why it is that you don't have to be right that often. You can be wrong more than you're right and still make a profit. That's why I use 3-to-1 risk reward. So what happened with this? This is what happened with BSX. And I think, what was it, 2 days ago we were in Trade U? So in the Trading U class 2 days ago, Will said, yeah, that one was fun. Now, I don't know if he meant he traded it or what the deal was, but he said it was fun. So I'm assuming he took advantage of this that we talked about in that class for subscribers. And he probably made a little money, I'm guessing. Now, maybe it was play money, maybe it was real money, maybe it was, I don't know what it was, up 480%. Okay. Now, I can't verify that. I don't know if what he's saying is accurate. I'm going to assume for regulatory reasons, he's talking about a paper trade. But that's paid for a lot of patterns in a flash. Exactly. That's what Amos said last time too. Amos isn't here. Peloton. He did it on Peloton. Anyway. So this is, again, I'm just showing you examples of why breakouts are so powerful. And this is literally, if you see the date there, okay, that is yesterday's. That's how it closed out yesterday. So that is just another example of what's possible. And this is one reason that I love patterns. It's why I use patterns. It's why I suggest you use patterns. First, learn to recognize the patterns, and then learn how to gauge the strength. I mean, is it strong? Is it weak? What are the other indications? What are the candlestick patterns? What are the things are telling me here? What is, I mean, you need to get a full ability to analyze the chart in a fairly thorough way so that you can figure out, okay, do I need to plan for this or not? And even if you're not spectacular at reading the charts, getting that risk reward in place and putting the plan on the screen like I have, and that's why I do it. It's very, very simple. Trading doesn't have to be complicated. It really isn't that complicated, especially if you're just trading stocks, right? You just buy it and you sell it, right? Or if you're shorting, if you're familiar with that, you can short it and sell it. If you I do day trading, right? And I'm buying and shorting, I'm going long and shorting all day long. Yesterday was awesome. When the market tanked really quick at the middle of the day, that was fun. That was a wave that was fun. But point being is that learning to analyze the chart in a good way, in a thorough way, is important. Learning to manage your emotions is even more important than that. And that's where the risk reward part comes in. That's why I suggest going and watching that video and implementing that. That simple technique will dramatically change how you manage your emotions with regard to trading. And I know that because years ago, the way I used to trade, I didn't utilize a risk reward. And all of a sudden, and I learned the concept of risk reward early on, but I hadn't seen it the way you'll see it in that video. And all of a sudden, one day, I decided to implement it, and I did it on some of my trades, not all of them, but just some of them. And then some of the trades, I was, now looking back, I call it winging it. Even though I didn't think I was winging it, I was winging it. So now I have a couple of trades over here that I've implemented a plan just like you see on the screen, where the odds are on my side. I know if I lose, I'm not going to lose a lot. If I win, I'm going to make 3 times as much. And then I have these other trades where I'm kind of winging it, and all of a sudden I'm like, wait a minute. I'm nervous and anxious about these, and my emotions are like kind of on edge with these trades. But the ones over here that I've got a trading plan in place, I'm not even worried about them. Like, oh, just let them go. Just let them do their thing. If it hits my stop and takes me out, that's okay. Because out of I think I had 3 or 4 trades on, and I knew that all I had to have was one of those trades hit, and I'd be good. Because if you make $3 on one trade and lose $1 on 2, you're still ahead, right? And in that moment, I realized the massive emotional benefits to utilizing 3-to-1 and having a plan like you see on the screen and sticking to it. Because if you put 3 trades on, all you need to have is one of them go right, and you're good. So just to reiterate, and then we're going to go have fun. Breakouts, why to do them? They're consistent, reliable. Other traders are watching, and when it breaks out, that's what happens. Okay, and you got to learn to ride the waves. So, and this is just a little quote that I love. If you're going to fail at just one thing, fail at quitting. For those of you that don't know yet, if you're new to trading, trading is not easy. I showed you some very simple concepts and very simple techniques today, and it is simple. It is not easy. But I can guarantee you one thing. If you will stick with it, if you are committed to it, okay, and you are committed to your long-term success, and you stick with it regardless of how difficult it gets, it will pay dividends. And if you've been married and you've been married for a period of time, because I know my parents have said this, and they are about to celebrate 52 years here in a couple of months, August. As we've had conversations, and my mom, well, both of them have told me that they talked about divorce when we were little kids, and they both decided that it was worth working at and fighting through. And now, here they are at 52 years, and they've said many times that they're glad they fought for it and they worked at it. And it's an analogy that I think is, trading's not much different. You might have to work at it for 5 or 10 or 15 years before you get to where you want to be. I've read books of traders. I know traders that have done that, myself included. I did it for years and years before I really got to where I was comfortable. It is a challenge. That's one of the things I love about it, is I like a challenge. I'm like the guy that likes to run, Mach 4 with my hair on fire. Sitting still, I don't do well. I love putting things at risk, but I also want to make a profit consistently. And it is difficult to do. The question is, are you committed to it, and will you do it long term? And that's what you have to decide, that you are going to do it no matter how long it takes. Because, if you think about it, when it comes to this business, what other businesses, what other opportunities do you have where you can learn and develop a skill? And even if it takes you 10 years, think about where you were at 10 years ago and think about where you want to be in 10 years. Let's say in 10 years, you work your tail off for 10 years, and maybe you give some money to the market over the next 10 years. But then in 10 years, you break through, you break out, and you finally figure it out, and you start to make a profit. And you start to make the kind of money that we all know is possible in trading, right? What's the rest of your life look like? I don't know where you're all at. Some of you might be in your teens, 20s, 30s, 40s, 50s, 60s, 70s. Where does it take you from there? In other words, what is the rest of your, if it takes you 10 years, which it shouldn't, but for some people, and again, you're all coming from different places, you're working with different amounts. And the whole purpose of Patterns and Flash, why I created it, was to speed up the process. Because when I started, we didn't have the kinds of things, the whole intent of that tool. And I designed it for me. I literally designed it for myself to speed up my own process, because I felt like it was taking forever for me to figure it out. And so that's what it's for, Robert. That's exactly it's. And you know what? Honestly, I don't care what age you are. I was 24 when I started doing this, and I built this tool for myself probably a year after that. The flashcard part of it. right? Because that was the problem I had. The struggle I had was recognizing the patterns in the charts, is being able to see them. And that's what frustrated me. I learned about them in books. I'd read about them. I'd read about analyzing them and determining the strength or weakness of them. And then I'd go look in the chart and I'd see it, but it was too late. I needed to see it on the right side. And that's why I created the flashcard part, was I got to train my eyes to see these patterns on the right side of the chart, just like BSX, right? You saw it before it broke out. You've got to see it at that point so you can get ahead of it, right? It's like the wave coming. You see the wave coming, you got to be prepared for it. And so that was the purpose of Patterns and Flash, was to speed up that process for myself. And since it worked so effectively for me, I'm like, you know what? If it works for me, I'm pretty certain it's going to work for other people too. Okay, I'm done rambling, at least for a second. That's one of the things, and again, I don't know if sad is the right word, but maybe disappointed. I mean, I hear of traders that talk of quitting, or they did quit. I've met a lot of people over just the last few years that years ago, I met them in a different life with a different company, where I worked for the company, or I was a coach in the company, and then they come back and say, yeah, I got away from it. I just couldn't do it. I lost too much, or I got frustrated and I just didn't feel like I could do it. And they come back for seconds. It is, trading is a difficult business. It is the emotional challenge that's hard. So commit to it, okay? Make a commitment to it. Decide that you're going to make it happen regardless, and make it happen. You're going to have bumps and bruises. Just prepare for it. It's going to be hard. It's not going to be easy. But the question becomes, is it worth it for you? That's what the ultimate question becomes. So now what we're looking at, what you can see is an intraday chart. I know some of you are thinking, what platform is that? It's Thinkorswim. I just shifted to this at the beginning of the year. And I'm in the process of, actually, there's another broker I tried. I had some of my or not open, but I moved some of my small accounts to there, and just to test them out. And I really didn't like it very much. It really doesn't meet my needs. So I'm shifting those accounts to here, but I opened another one here. And this is a practice platform, just so you can see in the upper left-hand corner, simulated trading. We don't show, for regulatory reasons, we don't show funded trading. So what I'm looking for basically is just a pattern. And this is a 5-minute chart. I don't know if you can see in the upper corner here, but it's a 5-minute chart. It's 5 days of time. And you can see, and this is in TradeU, we just talked about the other night. If you're not in TradeU, that's the one thing you can look at too. We talked about, gosh, why am I drawing a blank? Intraday patterns, that's why. Because that's one question I get very often, is most of the time we look at daily charts. In fact, I think somebody, oh, Marius, I'm sorry, Marius. I remembered your question and I just forgot to get back to it. So what time frame and frequency are you using? The charts that you saw before in the PowerPoint, those are daily chart. This here that we're looking at now is an intraday. It's a 5-minute chart. And if I want to, I can shift it to, here's a 1-hour chart, right? It's 10 days and 1 hour. We can look at a 4-hour, these are 4-hour bars now, 180 days, or we can go look at a daily, right? So I can shift very quickly from one view to another. And the beauty of charting, and this is one thing I said the other night, is charting is charting is charting. Whether you're looking at a daily chart or a 1-hour chart, a 30-minute chart, you're welcome, or a 5-minute chart or a 1-minute chart, the patterns are the patterns. The analysis is the analysis. That is the beauty of charting. So, and then the other important thing is that you can move from instrument to instrument. When I say instrument, I mean you could trade stocks, you can trade currencies, you can trade Forex, you can trade futures. You want to trade wheat or corn or oil? You want to trade the S&P futures? You want to trade minis? You want to trade options? I don't care what instrument you're going to trade. Charting is charting. The core concept is the same, regardless of what time frame you put it on, regardless of what instrument you're trading. It's all the same. You can see there, right? This is a 5-minute chart. Well, there's an inverted head and shoulders. That is a reversal pattern, right? It says that the stock's probably going to go the other way. And even though yesterday it danced around a bunch, sure enough, today it's moving higher. And even right now, you can see it. In fact, let me get rid of that. And this is live, okay? This is what's happening right now. This is IIVI. I don't even know who the company is or what they do, and I really don't care. All I got to do is look at the chart. And you can see it's not moving super fast, but there's really no pattern here that I can see from an intraday perspective to trade. But there's a pattern right there. I want to keep looking through here. Oh, here's another one. Oh, this is Nucor. And I have just recently, and I mean this year basically, gotten back into day trading, which I did years and years ago. And it's been fun, and it's good. That's one of the reasons I use this. But you can see again, and if you're not familiar with this pattern, right, you've got left shoulder, the head, right? This is an upside down one. There's some eyes, right shoulder. So if this stock breaks out of that level, we put this down here. So on an intraday basis, if it moves above, looks like it'll probably be about 77, then what we can do is say, what's the measured move? And I'll be a little bit conservative and go right there. Duplicate, put a second one on there, and we look at it and say, okay, there is the measured move. So if it breaks above that neckline, then we'd expect it to go to about 78.66 or 78.60. So then what I'll do is I'll drag these lines around and say, okay, there's a resistance level right here. And again, this is just kind of some basic stuff. But again, just like you saw on the daily chart that I showed you. So now this is my stop out line, right? And I've already got these on here because I've been trading this. So if it gets above that resistance and it gets above 77.14, then I'm looking at a breakout to the upside, and for this to possibly move up to 78.60, which would be about the open of today, which is another common occurrence. It wouldn't be surprised to see that happen. So what I'm going to do is the green line up here, I'm going to drag this down, and I'm actually going to put it slightly below. I don't usually go right to the target. I mean, if it runs really fast up to that point, great. If it doesn't, I'm going to get out of there a little bit early. If I'm profitable, I'm good. So again, here is, we've got the stop at 77.02. Actually, you know what? I'm going to drag that a little bit down because the round numbers, I'm going to put that just below 77. I'm going to make it about 95. Because it's not uncommon for stocks to hit a round number and stop, right? That's another full lesson inside Patterson Flash is round numbers. And this thing might, we got 6 or 7 minutes left. I wonder if this thing will hit. You know what? Let's hurry up and get this thing in place. Where's my calculator? And then we go here, hit the calculator. Come on. There we go. So stop is 76.95. Target 78.54. So the entry point should be 77.35. So I'll come to this orange line. We'll double click it and just do this. So that'll drop it. You'll see now there's the entry point is 77.35. Now I'm going to remove this line because it tweaks my ADD. I don't need it there anymore. Now I've got a trading plan in place. And now if I want to trade it, if I'm going to trade this intraday, or if this was a daily chart, these candles could all be one day that you're looking at. And it just means, I mean, if each of these were a day, then obviously you'd have several days in play. Right now we're intraday. We come over to the active trader part. Oops, I guess I need that big enough. So my entry point 77.35. I'm going to say one of my rules is, and this goes for day trading and swing trading, pretty much any kind of trading, is I won't put more than 10% of my account into one trade. And I don't know if you can see the upper corner. So this is a day trading account. There's a little over $102,000 of buying power. So if I bought 200 shares of this, I'd be at 15,000 of risk. That's higher than I will go. So I'll just do 100 shares. So I have my quantity here and 77.35. So I'll go up the ladder to 77.35, and I'm going to say click on 35, hit buy, and you can see it says buy 100. Hopefully you can all see that. If you can, that's why I'm saying it verbally so you can know. It says buy 100 NUE stop at 77.35 to open. So then I hit send, and you'll see that green dot there, okay, this right here says, if this stock gets up to 77.35, I'm going to buy 100 shares at the market. So if it trades at 77.35, it's going to place my order and it will take it at the next available price. So I might actually buy it at 77.40. Depends on where the next price is. So this is a little far away, but who knows? This thing could, you see how fast this thing can move. This dropped from 78.80 in about 40 minutes this morning to 75.70. That's what, 3 points? I mean, it went 78.80 to 76.80, almost 2 points in the first 5 minutes. So these things can move very fast. That is one tricky part about day trading, is it can be very quick. But if you have that foundation, you have that base built as far as the analysis goes, and you do it. I mean, this is a very simple way to trade, but you've got 3 times as much profit potential as you do risk. And again, going back to the basics, is if you make $3 on one trade, you lose $1 on 2 trades, you're still ahead, right? And this is no different. But this is what I was telling you earlier. If you want to accelerate your learning curve, then go set up an account. And yeah, I know. I know that Toss isn't in Canada anymore. I know that isn't good for you guys. So I don't know why. There is, I think, and I don't know if this still applies or not, but some people, I remember, I've been to Canada several times doing workshops, and some people in Canada would have set up a US entity, like an LLC or a C Corp, and set up a trading account in there. That used to be a way you got around that, and then set up your Thinkorswim there. I mean, obviously that's kind of a workaround. There's some expenses involved with it, but there's also some benefits to it too. So just an idea. I don't know, like I said, you'll have to talk to an attorney, because I don't know if that still applies, if that's still a workaround or not, legally speaking. I'm not an attorney, so I can't tell you to do that. But the reason I wanted to look at an intraday chart is because if you're new, and if you're still learning, I don't care if you're new or old or how long you've been at this. If you want to accelerate your learning curve, set up an account somewhere. It doesn't have to be Thinkorswim, anywhere that has a practice platform. And excuse me just a second. Oh, I had a little sneeze coming, sorry. You can use any broker you want as long as they have a practice platform. There are some out there that do not have a practice platform. And honestly, that's why one of the brokers that I'm moving my accounts away from, they don't have a practice platform, and they don't have contingent orders, and that is a problem for me. I did not realize that when I set up the account with them. So, and obviously I should have asked those questions. I just assumed that because they're supposedly one of the better, more advanced platforms, I just assumed it was there and didn't ask. So ask the question, do you have a practice platform? And part of the reason I went with Thinkorswim is because there's a lot of students that use it, and they're familiar with this platform, and I'm still learning it, but it is a great platform, especially for practicing. And I actually like it, and the more I use it and the more I get familiar with it, especially from a day trading perspective, I really like it. So it's very, very good for that. But the beautiful thing is you can come in and set up a practice account and go do this and go look for the patterns on an intraday basis and trade on an intraday basis. If you have the opportunity to sit and watch it during the day, this is a great way to accelerate your learning curve because it speeds it up, right? You're doing it on a 5-minute basis. Put it on a 1-minute chart. I don't care, but use it to practice and learn. And then you practice trade, and then you get to see how things function, how they work, if you are. I mean, Marius, I appreciate the humble acknowledgement that you're a new trader. But that's good. And that goes back to know thyself. If you know you're new, know where you're at. But this is a great way to accelerate the learning curve. And another great way to accelerate the learning curve is this right here. The entire intent of this is to speed up the learning curve. And this is what you see, like I referred to earlier, the flashcards. And this is, if you just click on one, I'll show you very briefly because we are out of time. So I've got to show this. And Amelia has put several links in the chat box to where you can set it up. So see, these are just like flashcards, just like the ones you used as kids, right? Maybe use them with your kids in school right now. Everybody's homeschooling, right? Trying to get back in. My kids are finally back. Well, my son's still, he chose to stay virtual. My daughter's back in person. So it just goes through different patterns. And the videos, there's over 8 hours of video here. You know, there's the basics. If you're new, like Marius, start here. Start right there. Even if you've been around for a while, start right here. Because there's a lot of advanced techniques in here as well. I know the basics is a little bit deceiving. But this is what you have to have, right? What do we always say? I'll never forget my junior year in high school. We were ahead of the team playing basketball, right? We were ahead by 20 points. And it was a weaker team than us. We knew we were going to beat them. We were almost certain. And we started dinking around and trying to be Michael Jordan. And we lost our 20-point lead in a matter of a couple minutes. Coach was furious. He calls a timeout, of course, brings us all, and he starts chewing us out. Guys, get back to the basics. Get back to the basics. The basics are what we use 99% of the time on a daily basis. Start right here, even if you've been around a while, because there's a lot of very important concepts. The basic stuff that I do on a daily basis, 90% of it comes from that section right there. But there's over 8 hours of videos here. The monthly videos, these are the recordings of the live class like I did last week, and the one that I'll be doing next Thursday, which is just exclusive for Patterns of Flash subscribers. Those get posted here. So if you can't make it to the live class, you can come back and watch the recording of it. See, there's the ascending triangle right there. This is the one I was just talking about. BSX was in there. And then I agree with it. It's always better to be there live, but sometimes schedules don't do it. You've already seen the quizzes, you've seen the bonuses and the calculator, you've seen everything else in this tool. So that's essentially what it is. So take the free trial and then come out next Thursday night. And then you'll also have, I don't think I mentioned that, did I? Where's the pattern of the week? When you go to the flashcards, it's kind of the home screen, but what you'll see here is the pattern of the week, which there's 2 months worth. They keep 8 of them up there, but this is once a week. There's a video that's posted. You just click it and it goes here. And as you can see, this is one we looked at this last week, HIG. Nice little flag pattern. So it's basically just one thing. So there is a ton of material in here, tons and tons of stuff in here. So if you're new, get it. And I think if you actually look at the price it costs to subscribe, you'll be stunned at how inexpensive it is. So just go take advantage of the free trial and kick the tires. Take the quiz, find out where you're at, watch the risk reward bonus video, do those 2 things, and then come out next Thursday. And then if you don't like it, if you don't see the value, don't get it. Cancel the trial. No big deal. So, all right. Go to the pattern of the week in the past. Which one? Oh, and trade it forward. Oh yeah, awesome. That's a good idea too. So yeah, Will's saying go back to one of these from the past and trade it forward and see what happens. So there's lots of different ways to do that and to practice. And just for fun, real quick before I call it a day and we end our fun, you can see here that Nucor is starting to run higher. It'll be interesting. It's actually breaking out of the head and shoulders pattern right now. Oh, it didn't stick, but so we'll see if this keeps going. And again, go play with it. So watch this for the rest of the day or go check it out at the end of the day and see what actually happened if you have the opportunity to look at an intraday chart and see what happened with this thing. So, all right, setting alerts. Awesome. Thank you very much. I appreciate it. Appreciate y'all coming and hanging out and having